For over 75 years, the Transatlantic alliance between the United States and Europe anchored global stability. Born from the ashes of World War II and solidified during the Cold War, this partnership built NATO and championed democracy, free markets, and human rights. It was more than military cooperation. It was a political and economic bond, a unified West with a powerful voice. Disagreements like the Iraq War or trade disputes were seen as family quarrels, never threatening the alliance's core. But by 2025, the world had changed. China's rise as an economic superpower presented a challenge the old playbook couldn't solve. The US saw China as a strategic rival. Europe saw a vital trading partner and collaborator on global issues. This divergence fractured the shared threat perception that once glued the alliance together. The question was no longer if the alliance would be tested, but when. That test arrived in autumn 2025, with an unprecedented American demand that would force Europe to choose its future, and the world's. On a crisp October morning, Washington shook the world, a 100% tariff on all Chinese imports. This was economic war, aiming to decouple the US from China's manufacturing base. The US demanded Europe join in, insisting a united front was essential. Otherwise, China could simply reroute goods and absorb the shock. The message, you're with us or against us. For Europe, this was an impossible position. They'd acknowledged China's challenges but also sought engagement and cooperation. The American ultimatum destroyed that middle ground, demanding Europe abandon its nuanced approach. US officials warned of consequences for the security partnership if Europe refused. European capitals fell silent, emergency consultations began, and leaders weighed the risks. Saying yes meant economic crisis and loss of autonomy. Saying no meant defying their closest ally. The stage was set for a decision that would redefine global politics. Europe's answer would shape the world for decades. Europe's refusal was rooted in raw economics. The EU and China are deeply intertwined, trade worth over 800 billion euros, with industries like German automakers relying on Chinese markets and components. A 100% tariff would shatter supply chains, trigger massive inflation, and devastate jobs. No European leader could survive inflicting such pain on their own citizens. Billions invested by European companies in China would be at risk, with Beijing likely to retaliate by seizing assets and expelling firms. Europe's prosperity depends on open markets and global trade, unlike the US, which can absorb shocks with its vast domestic market. The American proposal was a direct assault on Europe's economic model. For European leaders, compliance would be economic self-harm, a red line they could not cross. The cost was simply too high. Europe's answer was clear: no. European leaders knew Beijing would retaliate, swiftly and severely. China has a history of using trade as a weapon, as seen with Australia and Lithuania. A 100% tariff would be met with mirror tariffs on European goods, devastating luxury brands and automakers. China imports high-value, non-essential goods from Europe, so it could inflict pain while protecting its own population. More critically, China controls key supply chains, rare earths essential for Europe's green transition and defense. Beijing could halt exports, crippling Europe's strategic projects. China could also exploit EU divisions, offering deals to some countries while punishing others. This divide-and-conquer strategy threatened not just Europe's economy, but its cohesion. The risk wasn't just economic, it was existential for the EU. Retaliation from Beijing was a powerful deterrent. Even if Europe wanted to comply, legal and political barriers loomed. Trade policy is a shared EU competency. Such a drastic move required consensus among 27 member states. Imposing blanket tariffs would violate WTO rules and undermine the EU's identity as a champion of international law. Abandoning the rules-based order would set a dangerous precedent. Internally, the EU was divided. Germany and Southern Europe opposed tariffs due to economic ties with China, while some eastern states were more sympathetic to the U.S. achieving unity for such a radical policy was impossible. The EU's consensus-driven structure became a barrier to action. The American ultimatum demanded unity. The EU simply couldn't deliver. Europe's refusal reflected its character, complex, legalistic, and unwilling to betray its own principles. Europe's refusal shifted the global landscape overnight. China emerged as the immediate winner, painting the U.S. as isolated and unreasonable. Beijing deepened economic ties with Europe, offering investments and access to its market. The transatlantic rift allowed China to pull Europe closer, not through coercion, but by appearing the more reliable partner. Russia, too, benefited. The split weakened Western unity, making it harder to coordinate on sanctions or support Ukraine. The China-Russia partnership grew stronger, with Beijing supporting Moscow and vice versa. The American attempt to isolate China ended up isolating itself. The West's disarray accelerated the rise of competing blocs. The transatlantic split didn't just benefit China and Russia, it solidified their alignment against a fractured United States. The world order was shifting before everyone's eyes. Europe's no marked the end of an era. The idea of a unified West, forged in the Cold War, was shattered. Economic interests had diverged too far for a common approach to China. In the U.S., the decision fueled isolationism and a sense of betrayal, eroding trust built over decades. In Europe, anxiety mixed with a new sense of purpose. Strategic autonomy became a necessity, not a debate. The break forced Europe to consider its own defense, technology, and foreign policy, independent of Washington. Globally, the split signaled the end of a single dominant Western bloc. Middle powers like India, Brazil, and Turkey saw new opportunities to assert influence. The world was no longer bipolar or unipolar, but messier, more unpredictable, and multipolar. The dissolution of Western unity changed the global game. The 2025 tariff crisis ushered in a new era, pragmatic multipolarity. Multiple centers of power, the US, China, EU, Russia, and rising regional players, now pursue their own interests. Old alliances still exist, but leverage and self-interest drive decisions. Countries form fluid, issue-based coalitions, not rigid blocs. Strategic autonomy is the new currency. Europe's decision was its ultimate expression. Developing nations refuse to pick sides, seeking investment, security, and trade from all major powers. Global governance is harder. Consensus on big issues is elusive. The era of grand universal agreements is fading, replaced by regional and interest-based deals. The transatlantic split was a pragmatic calculation, not malice. A sign that permanent interests, not permanent friends, shape the world. Navigating this new chessboard demands more diplomacy, flexibility, and a clear-eyed view. The old certainties are gone.